Good morning, everyone, and thank you very much for joining me. This is the morning market review. It's Wednesday, it's the 2nd of November. My name is Russell Shaw, Senior Market Specialist at FXCM. My email address, rshort@fxcm.com. Just going to bring up our high-risk investment warning. I'll keep this on screen for a few moments. We'll just go for 15 minutes, then we'll switch to the crypto minute. Okay, here's the market commentaries disclaimer. In just our references, we'll just go to Forex Factory first. And you can see FOMC press conference today, so please be aware of that. So 8 p.m. ZA, which would be 6 p.m. UK now, and then a half hour after that we'll get the press conference. You can see we're looking probably at 75 basis points here. I think 75 is a given. We want to just listen to the tone of the press conference and the statement. That's going to make a big difference. And we'll take a look at the real rate just to try and see what the market's thinking. Before we do that, let's go through the Bloomberg emails very quickly. The first heading says Fed meet. So the Federal Reserve is looking to deliver a fourth straight supersized rate hike. Okay, another 75 basis points, which is the fourth since June. So that's going to be huge. We're going to watch that. Credit Suisse downgrade. Credit Suisse's long-term rating was downgraded by S&P Global Ratings. I don't think that's a surprise. They're doing a rights issue now, which does dilute the company, and now it's been reflected in their ratings. In Denmark, Social Democrat Prime Minister Mette Frederiksen was unexpectedly set to win a majority in a nail-biter general election, putting her on track to secure another 4-year term. Frederiksen and her allies in the left-leaning Red Bloc won 87 seats. That compares with 72 mandates for the right-wing opposition Blue Bloc. UK inflation, prices in British shops rose by the highest rate since at least 2005 last month, as the cost of living crisis piles pressure on consumers. The British Retail Consortium said shop price inflation accelerated to 6.6% in October, a record for the index which started 17 years ago. Coming up for the session, European equities are poised for a modest advance ahead of the Fed's widely expected 75 basis point hike. Boeing is likely to provide its first meaningful guidance since early 2019 as it hosts an investor event. All right, let's take a look at some of the charts here. So we're looking at the daily, and you can see the real rate yesterday. You see this dragonfly doji. So real rate pushed down to the low. At the low, the sellers effectively lose control. The sellers of yield, which would be buyers of bond, lose control, and it shoots back up. Let's just take a look at this in terms of the dollar index. See how that went. And you can see similar price action in the dollar. So the correlation is very strong here. So clearly how the Fed affects the real rate is going to really affect US dollar today. So let's just be aware of that. I think it's a very good chance that the Fed comes out actually hawkish again. I don't think there's going to be a pivot. I don't see how there can be a pivot until we get a moderation in the median CPR. So I'll just show you again. We've looked at this a few times. Okay, I'm just changing this to a monthly view because this is a month-on-month figure, right? But you can just see there's no give at the moment with this this median, and that's effectively reflective of the stickiness of the inflation. So what seems to be moving to me is sort of the low-hanging fruit, right? The items in the basket that will respond to the rate hikes. Well, those have all responded. Now the question is, well, when do the sort of the more sticky elements, which would be rental numbers, healthcare was still moving up. All these sorts of things are still very much to react to the monetary policy, and I think that's why this median is so important. Once this rolls over, then we're in a new environment. We've got a new dynamic to work with, and we can start talking about risk market items, I think, with a little bit more confidence. But I think that this really needs to show signs of moderation. It might be there in the next CPR, but we won't know until after the fact. So we just want to watch that. I want to show you guys something else which I saw. This is oil. Oil has been in a downtrend since about June or so. It's looking to actually break that downtrend now. You can see that it's got this higher trough, and we're looking on a weekly basis. So this is primary trend stuff. So we've got the higher trough sitting in both UK oil, which is effectively Brent, US oil, which is effectively WTI, and now it looks like the platform is set for a potential higher peak. Let me just make this question mark here, because I don't know if we're going to get it, but what seems to be prompting this is there was I think it was a tweet it was an unofficial tweet from a Chinese economist saying that there's an opening committee that has been formed in the Politburo. So effectively, I think they're starting to plan the reopening of the Chinese economy. Now they're the second biggest users of energy, so that is huge when you factor in the OPEC plus cut, which was this big candle here. So again, oil now all of a sudden looking like it's turning up. Look at the stochastics. Stochastics have moved out of that lower quintile. So any of that downward momentum, it's gone. It's waned. Imagine if we get the higher peak and the stochastic moves above 80. Well, then we've got this inflation story again. How's it impacting on headline inflation? Remember, core inflation doesn't take energy into account, but the headline numbers probably start feeling this. So this is very interesting just to keep an eye on this chart. It does look as if we're getting this higher trough in. Well, we do have the higher trough in. It does look like we're going to get a higher peak here. All right, I want to just go back to the main layout here. All right, let's start off with the US dollar just because it's rate later today. And we have spoken about the lead from the real rate. So there's a decent pullback here. So the dollar's come back over the last 2 weeks. I think that if the Fed is as hawkish as I think they'll be, I think ultimately when we speak tomorrow, this is going to be pushing. It's going to be pushing upwards, okay, towards the upper quintile. So we want to just keep an eye on that. Just coming down to the hourly chart, the price action today, I would expect to be fairly muted until we get the rate announcement. Nevertheless, it's worth keeping an eye on it. Do we get a bullish cross here? And do we get a bullish cross here? And then if the Fed is hawkish, do we move through to the upper quintile? What would be surprising to me is if they are not as hawkish as I think. If they do suggest some sort of pivot, well then of course, you know, this would actually probably head towards the lower quintile. However, I think that median inflation has to give before the Fed can talk about a pivot. That's just my sense of it. All right, if the dollar is going to be sort of just waiting for that rate announcement, if it's treading water, so to speak, I think it flows through to other instruments. I don't think if there's a lack of volatility on the dollar until the rate announcement this evening, then probably lack of volatility all around, I would expect in most instruments. So if we go through to say euro, let's just take a look, see what's happening here. Okay, so I think the euro are going to take its cue from the dollar. What's interesting here, of course, it does look like it's rolling over. But if the dollar is not going to move, then euro is going to be limited in scope as well. Of course, the other side to that is if the dollar is moving, then the euro is probably going to be moving as well. Euro is already seeming to, it looks as if it's already preparing itself for some weakness. It's fallen from zone 1 into zone 2, almost as if it's anticipating a hawkish Fed. If we go through to the US dollar, you'll see that it's threatening to go into zone 2 from zone 3, as almost as if it's anticipating. And yesterday's candles got that dragonfly doji, right? So it's almost as if the market seems to be expecting the statement to be hard on inflation, expecting the press conference to be hard on inflation. Again, if it's not, it will surprise me, but never say never, right? Let's go through to DAX here. All right, I want to do a top down from the weekly. I think perhaps the best way to address this is also to go back to TradingView, and I'm going to come back to market scope in a moment. But let's just go back to the daily here. We might go to weekly. Let me just see how it looks. Let's get rid of this, and let's just change this dollar to the DAX. All right, so and let's throw in a correlation coefficient here as well. Okay, so we're looking at a daily chart. If I go to the weekly, it will keep the negative correlation. That's what I wanted to. So here we've got a negative 63% correlation. Let's just go down to the daily. So negative 57%. It's pretty close. What this is suggesting, and you can see it spends most of its time negative, is that if there is going to be a rate announcement that pushes real rates up, in other words, we're talking about a hawkish rate announcement, it's likely going to push DAX down. The other side of that is if there is some hint of a pivot, okay, well then we'll get this moving down, and this moving up. So again, the tone of the release is going to be very important. My expectation, subject to correction, is towards the hawkish side until we see that median inflation start to show signs of moderation. So with that all said and done, let's just go back to market scope. And you can see we're heading into this resistance area here. And it may be that this resistance area actually starts to influence price. Why? Because it's right by the rate announcement. Where it gets a little bit more difficult is, of course, well, what do we do as traders today? We are sitting in zone 1, which is a terrific place to be. And is there any chance of a movement up? Again, I would say that if the dollar is muted, markets generally will remain muted. I think there has to be some sort of nervousness around risk assets here. So even if we get a bullish cross here and somebody decides they want to take it because we're in zone 1, I just urge you to be really strong on your risk management, because I think that there is potential here for rates to push it down. All right, I think we can conclude at this point. Let's go through to the crypto minute and carry on the discussion, albeit we'll be looking specifically at cryptos. See you guys there.